when I do videos, a lot of people ask me about specific terms and things like that. So I thought in this video I'd explain really quickly in like 1 to 2 minutes. It's just an introductory video into like the different terms of the stock market. Okay, so in today's video I want to go over, and this is something that is very important to know, PE ratio. All right, this is very important to know the PE ratio. What does that stand for? What is that? All right, so the PE ratio is the price to earnings ratio. That's what it stands for, the price to earnings ratio. And it is a valuation metric to kind of value a company and see where its value lies. Okay, and so how do you find the PE ratio of a company? And so what does the PE ratio mean? So basically, what this means is that you're taking the price, PE ratio. So you're taking the price of the stock, okay, so the price of the share of the stock, all right, over the earnings. And so for the PE ratio, you're measuring the price of the stock relative to the company's earnings, and it's used by analysts and investors to measure the relative valuation of that company, and you can assess the PE ratio of one company compared to another company, or that company against itself, its past self. And so that's one way to see the valuation of a company. Okay, and I'll do a little example, and I'll go a little bit more into it. Okay, so for example, we'll do Apple. Apple has a price. The share price is $203, and we're just going to use whole numbers. It is $203. We're just going to use whole numbers. And then the earnings per share. So if you're not sure what the earnings per share is, that is what a company makes in profit if it were to be split between every share outstanding the company has. So if you split their profit between every share, and every shareholder gets a piece of their profit, okay? So their share price is $203, and their earnings per share is, let me check, I'm checking the Yahoo Finance page. Their earnings per share is $12.12. So if we divide that, we get a number of about 16, okay? So Apple has a PE ratio of about 16. And so in general, a high PE ratio can mean that investors are expecting a high growth in the company. And so their shares are trading at relatively high, which also can mean that the company is overvalued right now. Its share price is kind of overvalued. Its share price is much higher relative to its earnings compared to other companies in the industry. But if we look at the industry of Apple and the tech sector, Apple is trading at a relatively cheap PE, which means that its shares are about rightly valued for the earnings that they have coming in. And so a high PE ratio can signal that a company is overvalued. A low PE ratio can signal that a company is undervalued. So that's kind of like one of the key takeaways here. A company that does not make a profit, does not have any earnings, would not have a PE ratio. And so we're looking at profitable companies, its share price relative to their earnings.